Hello and welcome to this YouTube channel for ACCA FR exam prep. My name is Adam. In this video, I'll be taking you through how to account for transfer of asset which is under PPE to investment property. And essentially, we say there is a change in the use of the asset. So we want to look at how a transfer from PPE to investment property is accounted for. Now, let's look at the question. This question, XYZ own an office building with a depreciated historical cost of 2 million and a remaining useful life of 20 years at 1st April 2012. And it's important you track the dates, because in reporting, once you miss the date, you get the answer wrong. So now, fast forward, let's look at the requirement. What amount will be charged or credited to profit or loss, NOCI, at the year end 31st March 2013? So let's see. On 1st October 2012, XYZ ceased to occupy the building and let it out to a third party. So you will notice that the building is now moving from PPE to investment property. So there is a change in use of the asset. The property was reclassified as an investment property, applying the fair value model. And we have to take note of this, because the model would give us how the subsequent measurement will be accounted for, be it in P&L or in OCI. The value of the property was independently assessed at 2.3 at 1st October 2012, which is the date of the transfer, and had risen to 2.34 by 31st March 2013. So let's see how we account for this. Now, what I will do is to look at it accounting under PPE, because we have to look at from 1st April 2012 to the date there was a change in the use of it, 1st October 2012. And if you come within this period, this would give us 6 months. This will give us 6 months. So it means that we need to look at the carrying amount. The carrying amount at 1st October 2012. And this should be the carrying amount, which is the historical cost, the depreciated historical cost, 2 million at the 1st of April. So less the 6 month depreciation, and the 6 month depreciation should be 2 over 20 times 6 over 12. Now, what it is let's check the depreciation. 2 divided by 20, that is 0.1, and half of that, which is 6 over 12. So let's see, and that is 0.05. So this is 0.05. And when you take it from 2, we would have 1.95. Now, this asset on the 1st of October, it was reclassified to investment property. So under PP, you would say the revalued amount. So the revalued amount at 1st October 2012, and that was given to us as 2.3. What it then means is that there is going to be a revaluation surplus. So we're going to have a revaluation surplus, which should be 2.3 minus 1.95. Let's see. So 2.3 minus 1.95, 0.35. In terms of the financial statement, note that this depreciation should go to P&L. This gain, as per the IAS 16, should go to OCI. Now, we cannot account for the movement, so the investment property, as we are aware, we're going to use IAS 40. Now, look at it. We need a fair value at 1st October 2012, and that was given to be 2.3. And because the entity adopted the fair value model, we need a fair value at 31st March 2013, and that was given as 2.34. What it then suggests is that there is a fair value gain, and that fair value gain should be 2.34 minus 2.3, and that should give us, so 2.34 minus 2.3, that should give us 0.04. In terms of the financial statement, this would go to P&L as a gain, as a fair value gain, and that is what the principle indicates, that when we adopt a fair value model for investment property, the fair value movement should be recognized in P&L. So let's now look at the requirement. In P&L, two items will go to P&L. We'll have the depreciation and the fair value gain. So the net depreciation, of course, this is a charge, but you know that the fair value gain would be credited. So it means that the fair value gain of 0.4, when you net it out, so 0.04, sorry, 0.04. When you net it out, it means that we have a net charge of 0.01, and in OCI we have the revaluation surplus, and that revaluation surplus is 0.35 as we have calculated. So very simple. Know the movement, how we account for the transfer from the PPE to investment property. Know that you need to determine the current amount at the date of the transfer, and then also you account for the movement, which is the revaluation, and that revaluation will go to OCI. And now, accounting the investment property, we are applying a fair value model, and the principle is that a fair value model would give gain or loss, which will be recognized in P&L. I hope this video helps you in your preparation for the FR exam. Please subscribe to this channel to receive updates on new videos.